Hello everyone, welcome back to another video. In this one we'll talk about 10 mistakes we did as beginners, what were their consequences and how can you stop them from happening. You'll learn the lessons we had to find out the hard way. These are in no specific order, so let's get started. So mistake number 1, spending too much time on paper trading accounts. So what is a paper trading account? It lets you build a portfolio with imaginary money. It is a good tool to start out, but it should not be overused. There are some benefits of paper trading accounts, such as you are not risking your own money. This is good to start out because you are prone to make mistakes, and this lets you make those mistakes without risking your money. It also allows you to practice. When you are starting out, you need to know which strategy best suits you. And to do that with real money will only lead to huge losses. So it's good on that end. Also, it allows you to invest with no stress. When you're starting something out, you are not going to be really good at it. So there's going to be stress involved. And if you are also losing money, you'll probably stop investing because you think this is not for you. So it's good for you to start in a stress-free zone so you can learn about investing and not worry about losing money. However, there are some cons, such as no emotions. As you probably know, emotions and the psychology of investing is probably the most important part of investing. You need to be cold, otherwise the short-term volatility will get to you. You'll see the stock moving up and down and you will buy or sell in an impulse, and that's not good for you. Also, you are not going to do as much research as needed, or at least not as good of a research. Why is this? Because you are not risking your money. So you don't really care what companies you are investing in, as this is not your own money you are risking. As a whole, it creates vices that may hinder you in the long term, and if you bring these vices into real money investing, you'll probably lose money. So I believe it is important to start investing real money pretty soon, even if it is a small amount, so you can get your head straight on the psychology of trading and start dealing with the emotions of investing. Now let's go straight into mistake number 2. And for me this was investing in companies just because someone else invested in them, or copy trading. When I started investing, I did not know what I was doing. During that time, I saw other investors making a decent amount of money, so I wanted to be like them. What did I do? I bought the same exact stocks as they did. You should never do this. Firstly, you are not learning anything about investing. Secondly, they might be in a different situation. They might have a different amount of capital, a different time horizon. For example, they might be in it for the short term, while you want to be in it for the long term. They might have a different strategy, etc. You never know what the circumstances are, so you need to research the company you are investing in thoroughly before pulling the trigger. Mistake number 3 is investing in companies you don't understand. When I started investing, I did exactly this. For example, in the pharmaceutical and semiconductor sectors. When you don't understand what you are investing in, you can't possibly know you are investing in a good company. The experts in that field may know something you don't, eventually leading to big losses. Remember one thing: stick to your bread and butter. Invest in companies you understand so you can make sure you pick the best possible company. Mistake number 4 is selling positions because of short-term volatility, and I am certainly guilty of this. I would buy a stock and I couldn't stand the volatility, so I either sold for a small profit or a small loss. What does this show? I was not absolutely certain that these were good companies. Remember, if you believe in the company, the short-term volatility will mean nothing. One extreme example of this is my experience with Tesla. I bought and sold Tesla shares several times between 2017 and 2018, all the way to 2019. As you know, Tesla is a very volatile stock, and I couldn't handle these highs and lows all the time. I eventually sold it all, and we all know what happened next. As you can see here, a huge surge in the stock price, and that short-term volatility is actually looking pretty flat now. Had I been more patient, I would have gotten really good returns. Mistake number 5. Rarely adding money to your brokerage account. What most people do is they receive their income either from their job or other business ventures, and then they spend it carelessly. They either go to parties, go to restaurants every day, spend lots of money on overpriced coffees, and then, if there is something left, they invest it. You shouldn't be doing this. What you should be doing is receive your income either from your job or business ventures, invest a set amount every month, and then if there is money left, you can buy a luxury or two to reward yourself. The long-term goal is to have cash flow from your investments pay for these luxuries. So mistake number 6 is day trading. I also tried day trading because I wanted to get rich quick. But remember, every time you hear someone telling you that this or that will make you rich quick, it's probably a scam. I remember this one instance. I was day trading Nvidia and I made 5% a day. I was ecstatic. However, had I held the stock until today, I would have made more than 350%. This is when the saying, let short-term traders get the breadcrumbs as long-term investors will get the whole bread, really made sense to me. And this is if you are profitable. Most retail traders usually lose money day trading. Mistake number 7. Over-diversifying. I used to own too many stocks. As I was afraid of volatility, I tried to diversify, but I overdid it. Even if some of my stocks were having a great day, I would be making pennies, as my positions were so little. I didn't make the mistake of not diversifying, but that is also something lots of beginners do. It depends on the amount you are investing, but at Alpha Finance, we suggest holding between 8 and 15 stocks. If you want to hear more about diversification and risk management, go check our video, Investing for Beginners. We have a chapter on that. Now let's go straight into mistake number 8, and that is comparing yourself to others. I used to compare myself with everyone, whether that was some guy on YouTube, Warren Buffett, or some guy on Reddit. You should not be doing this, as you are just starting out and they may have years of experience. You don't compare Usain Bolt with some kid who has just started running. It makes no sense. After you've been learning about investing for a while, I suggest you only compare yourself with the S&P 500. I want to beat the S&P 500 every year, because if I keep getting returns lower than the S&P 500, I might as well be investing in it. Mistake number 9 is focusing too much or too little on the financials. I hear people only caring about the financials or not caring about the financials at all. You should do a bit of both. Don't get me wrong, it is crucial to look at the company's financials. However, when I started investing, I might have done it a bit too much. I would only want companies with the cleanest balance sheets, with basically no debt. What I didn't understand was that, if used correctly, debt is a wonderful way to expand the company. So basically, I was looking at companies with little growth prospects. Some companies might have worse financials as they are still growing and reinvesting their profits into future growth. Sometimes you have to choose companies with a balance sheet with some flaws. So now let's get into the last mistake of this video. This last one is related to some other ones we talked about today, and it is setting unrealistic expectations. Investing is no get-rich-quick scheme. If you think like that, you'll most probably blow your account. You need to change your mentality if you think you'll get rich quick. Don't think you will retire right away, or that you will be in your private jet counting your profits. If you want to gamble, you might as well go to the casino. On the other hand, getting rich slowly by investing is not only possible, but actually likely. I had to learn these mistakes the hard way. Promise me you won't be doing the same. If you are just starting out with investing, we have this video, Stock Market for Beginners, where we talk about when to buy a stock, when to sell a stock, different types of stocks and investors, risk management, among other topics. We believe this is really valuable if you are just starting out with investing, so go take a look. If you enjoyed this video, please leave a like, and if you are not subscribed, make sure you are. We will have new videos coming out. Also, leave a comment with topics you want us to cover.